Good morning again, gang. Okay, so still Friday morning, and I wanted to talk about something that, with everything else going on this week, has kind of fallen by the wayside and not really got discussed much. But that's inflation numbers. And like I said in the title here, is a recession on the way? And if this is something we need to really pay attention to, so thought I would definitely discuss it with you. Now, if you saw this week the numbers that came out, CPI for the first year of Biden's presidency, consumer price index, basically consumer inflation, up 7% year over year. So congratulations, Joe. Your major accomplishment for the first year of your presidency was prices went up on average 7%. Thanks. Okay. The producer price index numbers, which came out yesterday, came in at 9.7%. Now, they're not pair to pair, but they're close, okay? But just to give you an idea here, all right, the company that's making the widget had to pay 9.7% more in December 2021 than they did in 2020 for the raw materials to create that widget. When it went to the store, you had to pay 7% more for that widget than you did a year ago. Now, anybody with two brain cells can figure out that if prices for the producers are going up more than the prices for the consumers are going up, you're shrinking profit margins and the producers are eating that, okay? That can't last forever. Companies cannot operate on a loss without government assistance. So, something to pay attention to. But what I want to point out and why I say, are we heading into a recession, is the first thing I want you to do is take a look at this chart. Okay, so here, all right. If you look at this chart, this goes back to 1950, all right, and this is a CPI that is showing basically where we are on a quarterly basis, okay, for the most part. And the gray bars there are when we went into a recession. Now, obviously I was alive in the 70s, but when I'm 9 years old, I'm not real up on financial stuff, okay? But you go back to the mid 70s and you see where inflation hit and then we wound up in a recession. I remember the early 80s. We had the same thing. We had a short one in 1991. Then, of course, we all remember after 9/11, we all remember the housing crisis. And then, of course, the latest quick recession was based on the COVID outbreak. But if you notice, every time that we have a spike in CPI, we go into a recession. And this has been proven pretty much every year for the last 70 years, okay, 80 years. Look where we are now on the far right. We are seeing a spike in consumer prices. Okay, so there's your first thing. Now, the other parts that'll tell you that we are heading into a recession is when you look at the value of the dollar, and I want to show you this chart, okay? This is a day-by-day chart for about the last year, and you'll see that peak there in the center, that's about Thanksgiving, all right? And the dollar has gotten weaker since Thanksgiving, all right? So that tells you we are leading toward recession. The other thing you want to look at is oil prices. And I want you to look at this chart. That valley down there, somewhat in the middle of the page, that's about Thanksgiving. So we're seeing everything go up. So as the value of the dollar comes down and the price of oil goes up, as inflation goes up, okay, that leads us toward recession. Now, you get into even more of a problem is your money. Now, if you adjust for inflation, okay, real wages for 2021 were down 2.3%. Now, we all know that the numbers that the Fed puts out are very, very manipulated, okay? CPI numbers take out X food and energy, okay? Well, we all know the two biggest things we saw go up in the way of cost this year were groceries and gasoline / utilities, okay? So they're taking that out, and we still come up with 7% increase. So, y'all know we probably had about 15% inflation. That would be the real kitchen table number. But even then. But if you go down and say, all right, 15% was our inflation number, and our pay was worth 2.3% less, where's that money come from? As the dogs are probably seeing squirrels. Okay, there is our problem. Now, I've told you about the yield curve flattening, all right? I've told you about 1.75 on the 10-year note. Those are things to watch for. Now, the Fed, who is notoriously wrong, okay, expects somewhere slightly below 3% inflation for 2022. Now, mind you this, that's what they said this time last year, what they expected for 2021. They expected inflation in the 2 to 3% range. We wound up at 7. Okay, so I'm not putting a whole lot of credence into what the Fed is telling us. But this is where it gets even more worrisome. All right, the savings rate for the American public is drastically down. We are at the lowest savings rate since we've been in the 1970s. And yeah, this is after all of the stimulus checks and everybody got. All right. And why? Well, people have been out of work. People have been stuck at home. The cost of everything's gone up. So people have had to dip into their savings left and right. As inflation keeps going up and people have less savings, that means we have less money to spend at the stores. Makes sense, right? You don't have any money, you can't go unless you start putting more and more and more on credit cards, which eventually you max those out too. So eventually the spending power that the public has dries up. Now, the way the stock market is right now, and I've told you many times how overinflated it is, okay? The stock market is pricing in 8% earnings growth for this year. That's more than the historical average. So apparently the Robin Hooders and traders and everybody who are putting money into the stock market think we're going to have a banner year on the market. Okay. Fools. Fool and his money is soon parted. Even the Fed is saying that they don't expect that they expect somewhere around about 3.9, maybe 4%. Okay, so half. So if you don't have the earnings, the stock market's going to come down. You're going to see a lot of companies miss earnings, which of course causes people to sell out of the market, which of course is now going to affect the overall economy. All right. Remember all the time Trump was going, but look at the stock market, look at the stock market. It's completely speculative now. This is why I'm saying there's a recession on the horizon. 95% chance coming because the dollar's getting weaker, oil's getting more expensive, okay? The market is overpriced, so you start looking at, and inflation's running rampant. Even though the Fed is going to try to control it by raising rates, that does no good either because raise rates, people want to put stuff on credit cards, people want to buy houses. That makes your spending power less and less and less, okay? Because remember what I said, like mortgage rates or auto loans and stuff like that, those are tied to the 10-year. The more rates go up, the less people can qualify for. Is a recession on the horizon? Yes. How are you going to provide for yourself during it when everything costs even more and your pay inevitably doesn't go as far? Prepping is pretty much your only way. Stocking whatever tangible goods you can have is going to be very important. It's your only hedge. But I know all of us have talked about many, many, many reasons why prices aren't going down. I thought I'd give you the factual, numerical, visual idea of what's going on. I know I get wonky every once in a while with you guys, but I'm trying to help educate a little bit. So, if y'all like this, great. If you don't, I apologize, but I'm just trying to help. Have a good one, guys. Pinball out.